So we've got an exciting one, and it's all about buying a flat for the first time or buying a property for the first time. So this video is going to cover the Edinburgh property market. I'm going to briefly skim over the differences between buying a property in England versus buying one in Scotland. This is Googleable, so I'm not going to go into too much detail. The actual process of buying a flat and also a timeline of these steps, including some Edinburgh specific caveats, the mortgage and the Help to Buy and LISA process and how you actually extract that money with the government bonus on top of it, and also hidden fees. We've owned our flat for,
oh my god, what is it?
14 months. As soon as the offer was accepted on this flat, I started writing a blog post. So I actually launched this YouTube channel way after I started my blog, which is why I had a whole list of things that I wanted to talk about, because the process of buying a flat was pretty lonely. Although I did buy it with my boyfriend, so it wasn't just me buying a flat by myself, just us two trying to do it in Edinburgh. And we did have friends that did it, but I don't know why buying a place was just it felt too taboo to ask too many questions, and people weren't really willing to talk about it. So I'm gonna give you every detail I can, minus actual numbers, because I have to respect the fact that I didn't get this alone, there's someone else involved. But I'm gonna try and be as transparent as possible to help anyone who's, you've got the money saved up and you want to buy a place, what actually happens after that. So I've got a lot of notes. I want to also really importantly note that we did purchase the flat before COVID. Everything was finalized in 2019, right at the tail end of 2019. So we were very lucky in the sense that there weren't any disrupted viewings, our interest rates, and therefore the mortgage was quite reasonable, and the actual mortgage process was pretty, I don't want to say easy, but a lot less stressful than what it could potentially be post-COVID or during the, panic times. So the Edinburgh property market, what a market, by the way. It's very similar to London in the sense that places are extremely overpriced, in my opinion, depending on what area you buy in. Now, the biggest shock for me, and something that no one tells you about, even the mortgage advisor didn't really tell us about it until we had made our first offer, and we then realized that this is a thing, is that offers are made on an offers only basis. So for example, a flat will be up on the market for £100,000 and it is valued at £100,000. When you find it on Rightmove, it will say offers over £95,000. And then when you actually go to make the offer is inclusive of a cash amount on top of the home report value, and that cash amount is purely for the offer to be competitive, which to me, I still think it's crazy. I still think it's absolutely wild, the amount of cash people just throw at properties. It's another thing that is really specific to Scotland is closing dates. Now, closing dates is when a property gathers enough interest, the seller will actually set a specific date and a specific time on that date that everyone who's interested and has actually submitted a note of interest to their solicitor, all these people have to submit their final bids. And it's a horrible process for the buyer because you actually don't know what everyone else is gonna offer. You're kind of overthinking things in your head. You probably are gonna offer over what you would have maybe offered if there wasn't so much intense competition. But it's a great situation for the seller. So either way, someone's winning. Because of this whole closing date situation, we learned that if we liked somewhere, we had to tell the seller quick and put in an offer quick, and a competitive offer, so that they weren't tempted to then take that to a closing date. And then also Edinburgh flats, similarly to properties in London, are usually the Victorian Georgian tenement flats, which is why they can be quite expensive and they have quite high maintenance costs as well. Not every place is like that, obviously. There are plenty of new builds, there are plenty of well refurbished tenement flats that you don't have to buy as a kind of crumbling wreck. It is adorned with tenement flats, and that's what is something that is really beautiful and nice about Edinburgh, and we have a tenement flat and I do love it, so I'm not going to complain. Now, the differences between buying in Scotland and buying in England, again, as I said, I'm going to really quickly skim over these. That's because this is all information that's on Google. You can Google it. I'm not very well versed in the actual specific differences because we have only bought property in Scotland. And the major difference, and one that really guides your final offer, is the fact that sellers don't provide the home report, or I think it's a survey in England, whereas in Scotland it's something the seller has to do. You have to get the property surveyed and valued prior to it going up on the market. And this was a really, really useful point because it's not an extra cost to then get that survey done. You can get independent ones done on more specific areas that the home report maybe highlights once you're more interested in that property, but prior to even going to the property, you have the option to examine and really look at the home report in really good detail so you know what you're then looking out for at viewings. And it was just an extremely, extremely valuable and useful difference that I really appreciated. The second huge difference that really affects your budget is the fact that stamp duty is different between England and Scotland. This is also something that changes year on year depending on property legislation, so keep an eye on these and always factor these into your budget. And the third difference is one that is really beneficial to if you're buying in Scotland, and that's the fact that the missives, so like the actual contractual terms, are legally binding in Scotland. So once these are actually concluded and finalized, the seller can't pull out. That does save you that tiny little bit of worry. And the fourth thing is that once an offer is put in and the seller accepts it, that is the finalized offer. Like, no one else can kind of swoop in and tempt the seller with a higher offer. Once it's accepted, it's final, unless, you know, they pull out, but then they'd have to pay some kind of damages for pulling out. And then another common thing in Scotland is the fact that prices are usually above and over the home report value. So I said this at the beginning of the video. So there are three like key figures when you're going through the bidding process, and that's usually the home report value, the deposit, which will be based on the home report value, and your final offer, which will be a combination of the home report value, your deposit, and then how much you have left over to make a competitive offer to the seller. So our timeline for purchasing a flat was quite long, and I only think it's long because I'm comparing it to friends and friends of friends that I know that have purchased property, and our timeline from start to finish took just over 4 months. So we had the first ever mortgage appointment on the 12th of August, and we completed and were able to get the keys on the 18th of December. So it was quite a long and grueling process. The actual specific timeline was we had our first mortgage appointment on the 12th of August. We had our final offer on this place accepted on the 4th of November. And then we had our second mortgage appointment on the 12th of November. And that's when the mortgage application was made. I'm going to go into a bit more detail on this process in a minute. The mortgage application was then approved on the 27th of November. And then the missives were concluded on the 3rd of December. And then we were able to get the keys and move in on the 18th of December. So things kind of sped up once the final offer was accepted, but to get that final offer to be accepted was long. Once we had decided that, right, we had the funds and we know whereabouts we wanted to buy a property, obviously this was extremely vague. So once we had those two things decided, we researched a mortgage advisor and we just looked up on Google the highest rated advisors near my workplace, because it meant that I could go to appointments and things on my lunch and things like that. But so we were really lucky with our first appointment with the mortgage advisor, because we ended up having a guy who was of a similar demographic to us, so we were able to ask him like silly questions. We were able to relate to him. He was able to give us a lot of like relatable information and information that was actually useful to us. Now this first mortgage appointment is primarily to get your decision in principle, which is a little certificate from the mortgage advisors that they will have got this very rough proposal from a bank that you will be able to get a mortgage that is of a certain amount, which will then allow you to actually go away, look at properties and make offers. So you need this decision in principle before you make offers, so that when you do make the offer, you can actually say to the seller's legal team that, you know, here's some kind of proof that we can actually get a mortgage to cover this property because we want to buy it. That's kind of whole situation you're trying to explain. And then the output of this first mortgage advisor meeting was a recommended contact for a legal solicitor, which is the second person you need in Scotland for actually buying a flat. Your mortgage availability through your decision in principle, so your maximum amount you can borrow from the bank, and also the recommended mortgage you should be taking out based on your income and affordability. A monthly budget of all like relevant expenses, including all the like income protection and life insurance things that the mortgage advisor will consider, the level of deposit you'd be expected to pay, and also the percentage of your income you'd be expected to put away for home and life insurance, which is usually a very specific requirement of getting a mortgage. Another thing we did actually get from the first mortgage appointment is details of what we then need to bring to the second mortgage appointment once an offer was accepted. So things like pay slips and bank statements and things like that. So straight after our first mortgage appointment, because we did take our advisor up on his referral for a legal solicitor, and we used them anyway because we didn't really know who else to use, and we really liked our advisor, so we really trusted his opinion. And they got in touch with us super quickly, and then also gave us some very initial documents giving us a very rough quote of what we'd be expected to pay for legal fees and how to actually make an offer. So they gave us very specific instructions, and they literally said, go away, book the viewings, view the flats, and call me when you want to make an offer. That's literally what they said to us. So this was initially really fun because we were booking viewings, and it was kind of like, it was really fun to see all these places, but then we slowly learned that, you know, people are like sharks here and offers get made really competitively, and it was an incredibly grueling 4 months to actually getting our offer accepted on a place, but we learned a lot. After you find a place and make an offer, and then this offer is accepted, this will get formally written up into documentation that the seller has to sign and send over to your legal solicitor as well. And this is the point where it will cost the seller more to back out, i.e. accept a higher offer or something like that. And it's usually pretty final at this stage, so we did celebrate a tiny bit. But bear in mind that nothing is actually finally concluded until the missives are concluded, which isn't for a long time after the mortgage application is actually accepted and approved by the bank. So it's not actually final, but it's final enough to be like, the hunt is over. But the missives is actually when pen is actually put to paper, sums are transferred, all the really juicy big dog stuff happens. So in between the offer being accepted and the missives being concluded is when your mortgage application is actually approved, and the mortgage application is actually made through the second mortgage advisor appointment. At the second mortgage advisor appointment is when your mortgage advisor will go into extreme detail analyzing all of your financial liabilities, your bank statements line by line for the last 3 months, your pay slips, any kind of financial benefits you get from work. And for us, this mortgage advisor appointment, the second one, was about 3 hours, so it was really long because the advisor had a lot to get through, but that application is finally made by the mortgage advisor on behalf of yourself, and then you just have to play the waiting game for that to actually finally be approved. So then once the mortgage application is approved and then the missives are concluded, the monies are all transferred. And this is all of your deposit, anything from Help to Buy accounts and LISAs. And then once everything is transferred, you can officially pick up the keys and let out this like huge like, because it's done. Now, transferring the funds was definitely the most terrifying day, I think, but also exciting. So just a lot of adrenaline going in this one day. Now, the actual mortgage process really surprised me because obviously the mortgage advisor that we used, we didn't actually have to pay for using that mortgage advisor. I think they worked completely based off commission. We only had to pay legal fees, obviously, for the legal solicitors. So as I said, the actual application to apply for the mortgage for that specific property that you've made an offer on, that application is made on the second time you meet with your mortgage advisor. Now, our maximum mortgage, like the actual top end of what we could borrow, was about 5.5 times our combined salary, which I thought was a lot higher than what I'd read online. I'd read online that you'd only be able to get between 4 to 5 times your salary, and maybe it was so for if you're applying as a single person. So I'm not sure if that was a caveat to applying for a mortgage as a couple or not. The maximum mortgage we could get was quite high. However, saying that, our affordability within that mortgage was, you know, not as high as the top end of it. So we were advised you can get this much as your maximum mortgage, but you can only afford this, so we would recommend you go for property valued at maximum X. So the mortgage ideally just needs to cover your house value less the deposit. As I said earlier, our first time buyer deposit requirement was 10%, and I was expecting this as well from the research that I'd done online. And I personally was really nervous about applying for a mortgage, still having all my, student habits and not having the healthiest looking current account. And this really made me sweat when we had made the mortgage application and we were waiting to hear back on whether it was approved or not, because I'd heard a lot of horror stories and clearly I'd read too much stuff on Reddit. What shocked me was the fact that good credit really rewards you well for if you're trying to buy a property, as well as just being able to show that you do have enough cash reserves to meet any emergency requirements through this whole process. And that's combined. So did you have enough cash ready at hand to cover the deposit, any extra fees, and the first month's mortgage? That was enough, according to our mortgage advisor, in combination with our good credit to suffice the mortgage advisor of likelihood of our mortgage application being accepted. And by good credit, I mean that even if my credit card bills were slightly higher than the average person, I was still paying that off monthly in full. I didn't have any huge loans apart from student loan, which by the way did not affect the mortgage application at all either. I don't really even remember the mortgage advisor asking any more questions other than what the salary deduction for our student loans were. And you could easily just see that from our payslip. So he didn't really ask that many questions. Another thing that really shocked me was how much detail the mortgage advisor actually goes into when they're reviewing your bank statement and your payslips and things like that. And they really go through line by line the last 3 months of bank statements for any and all accounts that you have. Credit and debit cards, current accounts, everything, including your LISA, they will look at. And they will analyze, and they want specific figures and contracts for like things like car finance payments, personal loans, huge credit card bills, and how much of that credit card bill you're paying off, and then how much interest you're having to pay as well. These things were all considered, and they really turn you inside out. Another thing I was really nervous about was the fact that I'd taken an interest-free loan out with my job at the very beginning, and I actually had used this loan because it's interest-free to fund my LISA, and I was worried about this commitment affecting my affordability for the overall mortgage. But because it was pre-tax, I don't think it really did affect me, and well, clearly it didn't really affect us that much, but it was considered. And obviously things like gambling and illegal activity, like line items in your bank statement, will be huge red flags for the mortgage advisor because they're the ones making the mortgage application. So you really have to do a lot of forward thinking for if you want to buy a property, keep your records really clean. And another thing was that our interest rate was actually quite low, and obviously this is because it was pre-COVID. It was around 2.03%. Another thing was that I really wanted to stick to a 25-year loan. The average is about 25 to 30 years for our age group and for you as a first-time buyer, and I really wanted to stick to the 25 years just because it seemed a lot less daunting than 30. But obviously this means that payments are higher. And our mortgage advisor actually gave us some really great advice that I think is really useful, and I'm really glad we followed it looking back. But he told us to go for the 30-year loan to give us that flexibility of being able to make that lower payment just in case anything went wrong, because the mortgage we actually applied for allows us to make overpayments for the first 10 years. So he said, get that 30-year loan, so on paper your actual commitment is lower every month, but then we can just overpay that difference, making the whole loan equate to a 25-year loan anyway. Now, the Help to Buy and LISA process really confused me. I kind of stuck my head in the sand about it until it wasn't too late, but I did leave it to a stage where I was kind of like, if I'd left it like an extra 2 days, it would have been too late and I could have ruined everything. Now, let's rewind. So I used a LISA and my boyfriend used a Help to Buy. And yes, you can use two at the same time for buying a place, but I think you can't actually open a Help to Buy anymore. So only if you've had one historically, this will apply to you. So with the LISA, it was really specific and you have to do a couple of things yourself. So there are two forms that need to be filled out. There's one that you have to fill out and it's an investor declaration, and you have to put down, the property details and your LISA details. And then you also have to send your solicitor a form for them to fill out basically authorizing this purchase and just saying that it's like a legit purchase. Then your solicitor will have to send both forms to the ISA manager, who will then release the funds to the seller. So your solicitor has to be the one kind of organizing this whole thing, but you are the one that needs to fill out the form that you need to fill out, the investor declaration, and send that to the solicitor in a timely manner. Now, the ISA manager can take up to 30 days to actually release the money to the seller, so it's even more important that this is done at least 30 days before your completion date. And if that's not physically possible with any specific time limits that you've been given, just as soon as you're physically possible to. And with a help to buy ISA, you just basically have to tell whoever your ISA is with that you're ready to use their money for a property purchase, and therefore you need to close your account, and then they will give you a closing letter, and then you basically need to send this closing letter to your solicitor so that they can apply for the bonus to be applied, and then this actual total amount will be paid to the solicitor and not to you. So the solicitor will then transfer the funds along with your deposit money, which you actually transfer to the solicitor. They will transfer everything to the seller. Now, while both processes are relatively early, I'm going to stress again that you have to do these as soon as you know they need to be done, and if possible at least 30 days before your completion date, because if you delay any transfer of monies on completion date, it's gonna be bad. Now, hidden fees. There were so many little things that you just don't know. They add up to thousands of pounds, but I would strongly recommend you at least budget for these costs so that even if they don't actually realize for you, at least you've budgeted for them and you're not left scrambling at the last minute. So I did say that we didn't actually have to pay for the mortgage itself, but there was a fee attached to the mortgage. So there was, for different mortgages, there were different upfront fees that you had to pay, and our fee was actually added to the total mortgage amount, so it did increase like the total borrowing that we had. So we didn't actually have to pay for this, but it was an extra expense that I didn't see coming. Would also budget for like essential things that you need moving in if you don't have any furniture already. So for us, this was things like mattresses and cooking supplies, just things we needed at the very initial stage, like things you can just get by with without having to buy loads of stuff at once. And also mortgage payment and utilities for the first few months, and like setting up utilities, for example the first month or first 2 months of gas and electricity, Wi-Fi, and in the UK council tax. And with home insurance, which is a requirement for the mortgage, by the way, you can't not get it, and it has to be set up and bought to cover your first day, so like completion date. And I would actually just really strongly recommend that you just pay this in one lump sum if possible, because you're saving that interest fee anyway. And also stamp duty, so this will be added. So stamp duty will be an extra cost that the solicitor will ask for. You have to pay this to the solicitor, but this is on top of your legal fee. It's not included, so you do have to budget for this as well, and you'll have to calculate this as well based on the property value that you end up going for and what kind of offer you make and your own personal circumstances. And you also have to budget for any potential items of like furniture, furnishings, like things like washing machines, light shades, curtains, if the seller isn't giving you this like for free with the property. You might need to negotiate a price for this to buy it with the flat if you do want them. For us, it did make it really easy. We didn't actually have to pay for them, it was included, but we got the like washing machine, dishwasher. We last minute got offered a bed frame. So a lot of things like that, just negotiate and just keep a tiny bit of money aside for things like that if you did need to pay for them. I would also budget for any kind of add-ons that the mortgage advisor might advise you to do, like income protection, insurances, or life insurance. You should also budget a little bit extra a month for service charges or like communal costs or factor costs. So this you'll realize, first we did see different prices between £5 a month to about £100 a month, and these were just communal charges, so like things to clean, stairwells, like communal stairwells, windows, communal repairs, fixing the buzzer, things like that. So you should really know what that cost is before you're making an offer, but that is sometimes another thing you have to budget for, especially with either older flats or some new builds. And then anything else that's specific to the property that you will hopefully come across in the home report. So anything like, for example, if you need to replace a shower or a boiler or a window or something like that, make sure that you have enough budgeted, or you have enough to maybe start a budget for that, so that things don't start crumbling as soon as you move in and you don't have to make a last minute emergency repair anywhere. So these are all the things that I really recommend that you budget for, just to make the first few months that little bit easier and just make moving in, living in your first place, experiencing your first place a lot more enjoyable and a lot less stressful. No one wants to be scrambling on the first day in. I really hope I've managed to cover everything. If I've not, I'm definitely gonna add to this as a blog post on my website, so I will keep you guys updated for if I do add anything to this. And there is definitely a part 2 coming, because I have so much more to say in terms of advice for viewing flats and like what to ask specifically and what to look out for, and just general advice to be, you know, savvy about this whole process, because there's a lot of things that you don't get taught. You have to learn by experience, which is really annoying. So I'm going to try and share as much as I can so that you guys can learn from any mistakes that we've made. But I really hope this helped. And if you have any questions, again, please feel free to either email me or drop me a comment. But that is it for this week, guys, and I'll see you next week. Bye.